Hey everyone, this is Ronak Ahuja. Welcome you all again. Are you thinking of diving into this exciting world of futures and options? Or are you already trading this segment of futures and options and wondering about the tax implications? If yes, you've come to the right place. Futures and options can be very powerful tools in the current market scenarios that provide various exciting opportunities to its traders as well as the investors. But remember viewers, with great opportunities comes great responsibilities as well, especially when it comes to taxes. Many futures and options traders, especially the new ones, find it very difficult to understand the taxability of F&O segment. And that's why we have come up with this video. We'll make sure that by the end of this video becomes your go-to guide to understand the taxability of the F&O segment. So, without wasting any further time, let's quickly begin. The first thing that we need to understand is what exactly do we mean when we say futures and options. As you can see in the right hand section of this video, futures and options include futures and options on shares, futures and options on indices such as Nifty, Sensex, FinNifty and many others, and futures and options on commodities on which commodities transaction tax is applicable, provided all these transactions are done on the recognized stock exchange such as NSE and BSE. Now, the next thing that we need to understand is under what head of income are the profits and losses of the F&O are to be shown. Typically, there are 5 heads of income, namely income from salaries, income from house property, income from business or profession, income from capital gains, and income from other sources. As per the income tax rules, all the profits or losses from the F&O segment will be shown under the head income from business or profession. Now I'm sure there's one thing on top of your mind, and that is, why do we exactly need to classify this under any heads of income? That definitely has to be the first question in your mind. Let me clear that out for you. The reason why we need to classify this income in one of these 5 heads is to determine the rates of tax that would be applicable in case of profits from F&O. Say for example, instead of classifying this F&O income under the head income from business or profession, had we classified this under the head capital gains, the rate of taxes would have been different. There are special rates of taxes that have been defined for incomes that are covered under the head capital gains. But since the government or the income tax department requires us to report all the profits or gains or losses from the F&O segment under the head business or profession, the rates of taxes would be the normal tax slab rates. Yes, the tax rates that would be applicable in case of profits or loss from F&O segment would be the normal tax slab rates and not the special rates. There are no special rates of taxes applicable in case of F&O profits. Having said that, there's one more thing I would want you to know. The business income can be further classified into 2 categories. The first one is the normal business income and the second one is the speculative business income. The profits and losses from the F&O segment fall under the first category, that is the normal business income or the non-speculative business income. This was just for your information. Now, the next big question is, which ITR is to be filed in case you have profits or losses from the F&O segment? Now, in case you are an individual or an HUF, then in such a case, you are left with no other option but to file either ITR 3 or ITR 4. Since the profits or losses from the F&O segment are to be treated as income from business, there are only 2 options available, ITR 3 and ITR 4. Now, moving on to the next question. Are the tax audit provisions applicable in case of the F&O segment profits? In this case, I would like to highlight that the provisions of the tax audit will be applicable on the individual or HUF or any other taxpayer in case it has profits from the F&O segment. However, tax audits are not applicable to everyone. Such audits are required to be done only in case the taxpayer satisfies certain criteria. One such criteria is that the turnover of the taxpayer should not exceed 1 crore during the financial year. In case the turnover exceeds rupees 1 crore, then in such a case, the tax audit will be required to be done. However, in some cases, the turnover limit would be rupees 10 crore instead of 1 crore. Now, moving on to the second criteria, where in case the taxpayer becomes ineligible to opt for the presumptive taxation scheme because of opting out of it in the preceding 5 financial years, then in such a case, the tax audit would become applicable. For a detailed discussion on the applicability of tax audit, we have created a separate video, the link for which you can find in the comment section. Please remember to have a look at that as well. Further, please note the manner of calculation of turnover in case of futures and options is a little different. This turnover is required to be calculated just to check the applicability of tax audit. The manner of calculation of such turnover is covered in the next segment. Let's quickly move to that. Manner of calculation of turnover in case of futures and options. The guidance note on tax audit issued by the Institute of Chartered Accountants of India lays down the manner in which the turnover will be calculated for futures and options. However, cutting long story short, it would be the sum total of the absolute value of gains or losses for all the F&O trades done by you during the financial year. Now, what does this mean? Let's try and understand this with the help of an example. Say, for example, Mr. X enters into 9 transactions of F&O trades during the financial year, as per the table below. As per the table below, the first column is the quantity in which it engaged, the second column is the purchase amount, and the third column is the sales amount. We need to calculate the fourth column, that is the column of profit or loss as per each trade. In the first trade, the sales value was rupees 8400 and the purchase value is rupees 8100. In that case, the profit would be 8400 minus 8100, which is 300. In case of the second transaction, the sales value is rupees 3420 and the purchase value is 3240 and the profit is rupees 180. In the third transaction, the sales value is 2525 and the purchase value is 2700, which brings a loss of rupees 175. Now, likewise, we will be calculating the profit or loss for the rest of the 6 transactions. And the sum total of that would be 9175. Now, if I allow you to take a first guess, your first guess might be the total of the sales column, which is 58,855. That would be incorrect. If I allow you a second guess, your second guess might be the total of the profit or loss column, which is rupees 9,175. This again would be a wrong guess. So let me show you how you calculate for turnover for the futures and options. First of all, for all the profit transactions, that is, all the transactions that resulted in a profit will be the turnover of such transaction. That is, for the first transaction, if the profit is rupees 300, then in such a case, the turnover for such transaction would also be rupees 300. Likewise, for all the profitable transactions. Now, in cases you have incurred a loss, then in such a case, the absolute figure of that loss will be considered to be that turnover for that transaction. In the third transaction, we had incurred a loss of rupees 175. Thus, we will be ignoring the negative value and we would just be taking rupees 175, which is the absolute value. Now, we will be calculating the turnover for the remaining two transactions in which we have incurred losses, and the total will come to 12,435. This total of rupees 12,435 would be treated as the turnover for the F&O segment. However, please note that the manner of calculation of turnover for futures and options that has been discussed here is just for the purposes of tax audit. It could not be used for any other purpose. Now, what are the tax rates that would be applicable in case of profits from F&O? The answer is the tax rates that would be applicable would be the normal tax slab rates. Yes, there are no special rates of taxes in case of profits from F&O. In this case, the normal tax rate would be applicable. Moving on to the second question. Can the taxpayer opt for the new tax regime for F&O profits? The answer to this question is yes. In fact, this is the default tax regime. In case one wants to opt for the old tax regime, then in such a case, the taxpayer will have to file a separate form for that. That form name is 10IEA, and that would have to be filed before you file your income tax return. Moving on to the third and final question. Can the expenses be reduced from the profits of F&O? The answer is yes. All business expenses related to this F&O business will be allowed to be reduced from the F&O profits. For example, any electricity bill, internet bill, broadband bill, any other expense which are related to business, including brokerage charges or any other trading expenses. All such business expenses will be allowed to be reduced from the F&O profits. To wrap it up, just remember the key points. All profits and losses from the F&O trades are to be treated as business income. You have to report both the profits as well as the losses. And do remember to check the applicability of tax audit in case of F&O trades. Further, I would like to add one more point. It's not just about tax compliance. It's about an even bigger picture that includes smarter financial planning. So with this, we end it here. In case you couldn't follow, do give us a feedback in the comment section or write us a mail at talklavies@gmail.com. Thanks for tuning in and keep watching for more videos.